Hi, welcome to our show. Listen, we got a great show for you today, folks. We're going to be talking about tax bracket optimization as it has to do with tax planning, required minimum distributions and how that got changed with the Secure Act of 2019, and then the financial cycle. There's this business financial cycle that applies to business but to corporations, corporate earnings. So you're going to love our show today, so stay tuned.
Retiring Well. Brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well. Plan to retire well.
Tax bracket optimization. What is it? Listen, all it is optimizing tax brackets. All right, there's several brackets of taxable income that you need to understand and know where you're at in. For example, we used to have what we called the 15% tax bracket, okay? Now, under the new Tax Reform Act, that's actually 12%, 3 percentage points less. The next tax bracket used to be what we called the 25% bracket, but now that is only 22% under the new Tax Reform Act. Okay, now the lower bracket, now 12%, that's going to be all your gross income up to about $100,000, you know, give or take. I'm just going to round off for sake of illustration. The next bracket, it's gross income of about $190,000. Now, a lot of people don't understand this, but they think that if they fall in this higher bracket, that all their income gets taxed at that rate, and that is not the case. The first $100,000 that you make is going to get taxed at this rate, 12%, and then the next, any money above that only gets taxed at the 22%, not all of the income. So let's say I'm that person that has pension income, okay, and maybe I have Social Security, and so now between my pension and Social Security, my taxable income is, let's say that's about $70,000 total. I've got $30,000 here available to basically do what? Well, either accelerate and take income because I'm in the lower bracket, right? Or maybe I have an opportunity to do what's called a Roth conversion. Maybe I can take $30,000 each year while I'm in that lower bracket and buy Uncle Sam out at the low rate. Why would I not do that? Now, a lot of people don't recognize with the Tax Reform Act that in about 7 years, this is all going to revert back to the old rates. So I have a huge opportunity right now. If I'm somebody that's always going to be in that 15% bracket or in the 25% bracket, I've got an opportunity to buy Uncle Sam out at 3 cents on the dollar less now over the next 7 years. So here's an opportunity, but this goes just as well. Let's say I'm that person that has pension and Social Security income, maybe other income that's putting me right here. And that's always going to be the case. And then I have my IRA money. Well, if I know I'm always going to be in this bracket, now I have another opportunity right here to buy out Uncle Sam at that rate. So understanding where you're at in the tax brackets and the opportunities thereof, very important in tax planning. So I encourage you, if you're somebody that doesn't understand this, want to see if maybe you're a Roth conversion candidate or the like, then give us a call.
Great information, Larry, in regards to tax planning, and that's an important thing that you want to be looking at, especially as you come closer and closer to the end of the year. I was just sitting down with a couple, and they'd been planning for retirement for years, but the topic of tax planning had never really come up. They'd been putting money into their 401k and doing it on the traditional side, but they'd never thought about this Roth option and basically building up a tax-free nest egg for retirement and how important that could be down the road when, you know, in their case they were talking about, hey, when we get to retirement we might want to buy a fishing boat, or we might want to get an RV and travel around the country. And so we started talking about that and how a bigger purchase like that may push them up into a higher tax bracket. And so by considering looking at building some after-tax or tax-free buckets of money would be really valuable for them. Is that what you've seen too, Art?
Absolutely, John. You know, when it's interesting, it seems like so many times people are frustrated. They're just finding out now about how they should have been doing tax planning maybe for several years, or if not their whole lives. You know, you have this sweet spot when you get into retirement that maybe just before Social Social Security, or even if you're on Social Security, there may be some tax planning opportunities that can really better your situation. You know, obviously so much is spent on returns of investment, but what if you could save money on taxes? It's just like getting a better return on your investment. So please, if you're not getting that now from your advisor, you're not getting a holistic approach when it comes to investments, taxes, income planning, these are things that you have to be talking about. And right now, as we're nearing the end of the year, we have to do Roth conversions before December 31st. It's not a tax day thing. We'd have to get those done. So if you'd like to talk more about your tax plan or lack of tax plan, please give us a call here at Centennial Wealth Advisory. We'd like to give you a second opinion about that.
Christ Hope is a ministry that works in 7 countries in sub-Saharan Africa. We're focused on AIDS-affected orphan and vulnerable kids. And the first time I went to Africa, I remember holding a little boy named Joma. And Joma was 5 years old. He had AIDS. He had open sores in his mouth. He was skin and bones. He was lethargic. And they didn't know if he was going to make it. And I just remember understanding that Joma's mother was there also. She had AIDS. His dad had already died of AIDS. His sister had died. And this was a beautiful family that had been blown apart because of AIDS. And so Joma, thank God, has been able to get better because of drugs and ARVs. And even though we've come a long way in helping AIDS, it's still a huge issue. But children like Joma are vulnerable to being pushed off into orphanages and neglected and trafficked. And so we come in to help children like Joma be able to stay in families through the support that we do. We have about 1,700 children in our program right now. Interesting little thing, we started out, Christ Hope started out doing children's homes. But we quickly realized that the majority of children in the children's homes had families. And we moved in 2010 to a family-based preservation model. And we've seen a dynamic change and transformation in kids who are able to grow up in families versus institutional care.
Dave, I just want to thank you for Christ Hope. It's had a personal impact on my life. You attended our church, I think it was like 9-10 years ago, and you had all these little cards of these kids that we could sponsor. Out of that whole group of kids, I picked one child, and her name is Antonia Anthony Meadows. She was in the 4th grade. She just entered your program. We began writing with each other back and forth. And I understand now she's graduated. She's looking to go on to a university. And now our next step is trying to figure out how I can continue to support her in her endeavors, because I've grown to love this little girl, you know. And so it's been probably the most rewarding thing I've ever done in my life, because, you know, I think of that old analogy, that person, it was after the ocean kind of blew all these clams onto the beach, right? Yeah. And the guy's throwing the clams back, and somebody approaches him and says, you know, you're not making much of a difference. And he goes, well, I just made a difference to that one clam, right? That's how I feel with Antonia. I can't help every child in Africa, but I've been able to help one. And now since then, my wife has joined on, and we're now supporting 2 new ones. So it's been very rewarding, and again, just want to thank you for all you do.
Thank you. And so our children now, the first children, Larry sponsors one of the children that was part of that. Antonia, she was able to live with her family, and she's graduating from high school in October. And she'll be exiting the program and going on to university. And she's a great testimony of the impact of this ministry, helping children to be not just healthy physically and academically and spiritually, but emotionally, is that they really grow because they have family. They're not orphans anymore. They have families, and they live in families. Yeah, and I just really want to thank Centennial Wealth. Thank you so much for believing in us and being a partner with us and supporting us in this. This is huge and has a great impact directly to the kids in our program. So thank you.
We look forward to helping you plan to retire well.
We here at Centennial Wealth Advisory realize that everyone has been affected by this coronavirus in one way or another. We watch our retirement accounts drop significantly in value, and we have questions. Can I retire in a recession? How will the coronavirus affect my retirement? How do I develop an income stream in a recession? Can I still retire this year? If these are concerns of yours, contact us today for a free initial consultation and learn what you can do now to help you weather the storm. Simply call 888-608-5825 or visit sunwealth.com and let us help you plan to retire well. You probably heard in the news this new act that got signed into law called the Secure Act, signed by President Trump. What it stands for is setting every community up for retirement. Pretty interesting. That's why they call it the Secure Act. Now, there's a lot of highlights that come out of this, and I want to share them with you because some of these you're going to definitely want to know. First of all, we used to have the ability when you inherited an IRA, okay, this is not the spouse, this would be the kids or somebody else inheriting an IRA, they had the benefit to stretch that out over their lifetime. I mean, they could take the lump sum, they could do it within 5 years, or they could stretch it out over their lifetime. And then if they died and passed it on to their kids, they would have to keep that same lifetime number. But now that's gone. With the new law, there's no longer any stretch provisions. You have basically 10 years in which you have to take that money out. Now, it doesn't have to be done equally over the 10 years. You cannot take the money out for 9, but by the 10th year, you've got to take it all out. So that's very important to understand and know now. There's no longer an age cap to putting into an IRA. All right, so you can be 100 years old and still put into an IRA or contribute to an IRA. The key is you still have to have earned income though for that IRA. Now, this one is very important. It used to be that you had to take what was called required minimum distribution from an IRA in the year that you turned 70 and a half and then thereafter based on your life expectancy. Okay, so you could take it in that year, you had to do it the first year, but in that first year you had the ability to wait to the next year, you just had to take it by the tax filing date. But then in that year you had to take a double one, okay? But the new law says that if you turn age 70 and a half after December 31st, 2019, now it's age 72, not age 70 and a half. Now, if you turn 70 and a half before that date, December 31st, 2019, you're still under the old rule. You have to take it out when you're 70 and a half. But after that, 2020 and beyond, it's now age 72. Now, there's some other interesting things that came out of the law that you might want to know. If you took money out of an IRA before age 59 and a half, there was a 10% penalty. But there are some exceptions where you didn't have to pay the penalty if you met certain things. Well, there's a couple new ones they've added. One of the exceptions is for adoption expenses. If you have adoption expenses up to $5,000 and you want to take it out of your IRA to pay for those before 59 and a half, you're going to still pay tax on the IRA, but there's no longer a 10% penalty. Another area is qualified disaster distributions. Now I don't know what all the details of that are, but I imagine if you're in a qualified disaster zone, expenses up to $100,000 over a 3-year period, now you can pull out of the IRA with no 10% penalty. All right, so a lot of interesting things. Hopefully you found that valuable. If you think you might meet these exceptions or want to know some more of the details, then give us a call.
Well, really interesting information, Larry. You know, we've the first part of the show there, we talked about tax planning, and now we're talking about required minimum distributions a lot. And sometimes, with these required minimum distributions, it's almost, tax planning I wish we could have done a little bit sooner before we get to those times. In an ideal world, maybe you don't have required minimum distributions because everything is already shifted to after-tax money, but it's important to know your options. Retirement planning with tax planning is much different than planning for taxes while you're still working. It's almost backwards in some cases where, when we're still working, we don't want to pay as much taxes. We're trying to decelerate income. We're trying to decrease our taxes. But in retirement planning, there's a little bit of a shift that happens there. When it comes to required minimum distributions, remember, with this recent change, you're at 72 now. So once those start, they don't go away until your IRA is empty, and that's not a great thing either. But remember, you don't run out of options with tax planning just because your your RMDs start.
Right, and one of the big ones that I know our clients have tried to take advantage of is these qualified charitable distributions, and it's something that if you're looking to support a nonprofit, your church, what have you, then you can give money directly from your IRA and not have the taxable amount show up on your tax return, and that's really important now, especially as the standard deduction has gone up much higher, so you may not be able to itemize deductions like you did before. So again, it's vital that you be looking at and talking to someone that's helping you with your tax planning year in and year out. And again, that's something that we would love to sit down with you and just talk through what your plan is and how you can ultimately keep as much money in your pocket, your family's pocket, as you look to long-term tax planning.
My name is David Mikowski. I'm chairman of Veterans in Crisis. This is our tournament. This is our third annual tournament. I'm a former combat Marine, and I wanted to pay it forward.
Colonel Art Forster, U.S. Air Force retired. What a pleasure it is to be out here at Lickenheath today to play for such a worthy cause, Veterans in Crisis.
It's an honor to be here as a Marine Corps veteran. I served from 1996 to 2001 as a Marine Embassy Guard. Veterans in Crisis has done so much for the local community here, and we're proud to be a part of it.
I'm here with my Honor Bank team, golfing for Veterans for Crisis organization. I'm a fellow veteran myself, 6 years Army, 5 years Navy. So anything we can do to help out the veterans, we know they're in need and they did a great service for this country.
I'm honored to be one of the founding board members of Veterans in Crisis that is putting on this event. Veterans in Crisis, we are literally impacting vets at the grassroots, one by one, right here in Northern Michigan. Thank you to Centennial for sponsoring this whole and being a proud sponsor of Veterans in Crisis. We appreciate your commitment to helping veterans here in Northern Michigan.
My dad was in the Army, injured on Normandy Beach, and he went through 5 campaigns. I made it back home. My brother went to NAM. It goes without saying to me that without these guys, we wouldn't be here playing golf, okay? We wouldn't be living the life we live.
I'm one of the founding members of Veterans in Crisis. It is an entirely volunteer organization, but I wanted to get involved in something worthwhile, and I can't think of anything more worthwhile than serving our veterans.
I'm Bob Baldwin. I'm from Lake Leelanau, Michigan. I served in the U.S. Army from 67 to 69, did a tour of duty in Vietnam, 1968, 1969 with the 9th Infantry Division. I want to thank the organization that put this outing together. I know it's the 3rd year, and congratulations to a well-deserved turnout, and hope all the proceeds will help some of our fellow veterans.
You know, I myself am a veteran. I served in the Army National Guard in the early 80s, but I have a great deal of respect for those that were in the service and actually had to fight. I was fortunate enough that I didn't have to, get sent off. I put my time in, but a huge amount of respect for those that have, and a huge amount of respect for those that didn't come home.
There's a tsunami on the horizon with veterans that are in crisis, and it starts with veterans who have been now involved in a 20-year war, and preceding that we had a 17-year war with Vietnam. So now we're up on the precipice of a lot of those veterans that are retired, coming home, wanting to settle in, and they have issues. They have either PTSD or they're Agent Orange or some other kind of malady.
I heard a statistic not long ago that said that there was more veterans committing suicide from coming from Afghanistan than those that actually fought and died in Afghanistan. That's sad. To me, that just breaks my heart. We need to be taking care of our veterans. We love our country. These are men that are putting their lives on the line for our country. When they come home, they deserve our support.
98% of the proceeds that'll go directly to a veteran.
A lot of the veterans have issues getting quick service from a wonderful organization of VA but they're not the fastest response team. We have responded as quickly as 24 hours to help a veteran with a hot water heater or dental work or legal work even.
We heard about Veterans in Crisis that was serving local veterans, and we said, you know what, this is right in our own backyard. Let's sponsor them this year. So we're very proud to do that. Today, this is a golf event. It's called a scramble. So everybody's out playing golf and hopefully enjoying themselves. And the beauty here is just amazing. And they got a great day to boot.
I want to say thank you to everybody that's played in this tournament today, the giving of their time, our sponsors, Lock and Heath, who we are going to have a long-term contract with, and certainly I'd be remiss if I didn't talk about Centennial Wealth. They're our title sponsor, and we've got a multi-year agreement with them, and I'm just so blessed to have the opportunity to live in such a community like this with so many giving individuals and people who want to give back. It's a very humbling thing.
Professional fishermen have a game plan. Knowing what lures and what bait to use is key. As you can see, we aren't professional fishermen, but at Northern Michigan's Centennial Wealth Advisory, we are professional financial advisors. And just like a good fisherman, we have a plan, a holistic approach for your financial future, using income planning, tax planning, estate planning, wealth management, and healthcare planning to help you plan to retire well. We have lived in Northern Michigan all our lives, and we have offices in Traverse City, Gaylord, Petoskey, and Cadillac. Give Centennial Wealth Advisory a call or visit us at cen-wealth.com and let us help you plan to retire well.
Many of you might not know this, but I had my own tax and accounting practice for over 25 years. I had to advise a lot of businesses over those years, and I would always refer to what I called the financial cycle. But I wanted to kind of give you an idea what that looks like today, because I think it's just as relevant when you're looking at the market as a whole. So I just want to show you kind of this relationship and when it's healthy and when it's not healthy. Okay, again, they call this the financial cycle. You got what's called a profit and loss statement. That is basically your sales, the total revenue you're bringing in, minus your cost of goods sold. If you're a retailer, that's the cost of your inventory that you're selling, minus your operating expenses. That's your rent, utilities, wages, all those kind of things. Well, after you take your sales minus your cost of goods sold and your expenses, you get what's called your profit. And you're hopefully hoping that's going to be more than that, right? Now, there's also a financial statement called the balance sheet, okay? That just basically shows you a snapshot of your organization as of a specific point. So it's basically your assets, everything you own, equipment, inventory, buildings, and the like. It has to equal all your debt, your liabilities, and your owner's equity, okay? That's the relationship. Your assets equals your liability plus owner's equity. Now, here's how the cycle works. Your assets help you generate your sales. So if your assets are inventory, whether it be equipment or what the like, they're going to generate your sales. Then it's going to go down through what's called what I call the noodle maker, right, to generate a profit. Now your profits can only go one of three places. They can go back up into new assets, okay? They can either go pay debt, okay, your liabilities, or they can go in owner's equities pockets to maybe then turn around and pay dividends, okay? So if this is a healthy thing, you're generating enough profits to be able to do all these three things and generate enough assets in your sales, you have a healthy cycle, okay? But any one of these things become unhealthy, you have an unhealthy cycle. So let's say that I have enough to pay my debt, and maybe I'm paying into the owners, but I don't have enough to fuel my assets. then that's going to slow down my sales, which is going to affect my bottom line. So folks, when we look at the economy and we hear things like low interest rates, okay, that's good for corporations because their ability to pay debt is good. But as soon as interest rates rise, their ability to pay all that to debt gets less and their financial cycle can be hurt. All right? Let's say growth is slowing and sales are starting to decline. That's going to lower their profits and then make this unhealthy. So just like a human being where we have organs and they all have to be in balance, the financial cycle has to be in balance. So when you're hearing things in the economy about slower growth or higher interest rates or any of those kind of things, know that there's a lot of good reason behind it. So hopefully you found this valuable, just something I thought you might want to know about. If we can be of help in any way, then please give us a call.
What a wonderful topic here to kind of be talking about current events and stuff like this. It's really interesting right now, the time we find ourselves in. You know, some industries, businesses, folks are dramatically affected by this times we find ourselves in, and other ones are thriving. And it's just such a unique thing that we find ourselves in. I just had a meeting with a gentleman the other day, and he was not planning on retiring for a couple more years, but because of his circumstances at employment, he was basically forced out, and now coming in and saying, well, I planned on working 2 more years. I've kind of missed my goals a little bit from a savings perspective, but can I retire? What does that look like? And for you out there, if you are in this situation or maybe wondering if you can retire, it's important to have those conversations now and start looking at that to see what that looks like, see what income things, see if there's things you should be doing from a tax perspective. You know, times are different right now. There's maybe some opportunities to be doing. But if you find yourself in maybe that unique situation or just flat coming up on your planned retirement, what better time to be talking about that?
Yeah, Art, that's something that I just came across as well with an individual who was planning on working another 10 years and ultimately had been in the same career for 30 plus years and unfortunately was let go earlier than she expected. But again, that's where our job here is hoping to help you plan to retire well, and so that's where it's an opportunity if you'd like to sit down with us. There's no cost, no obligation, and we'd love to just chat with you about what are you trying to accomplish with your retirement planning, and whether you're already at retirement or soon approaching retirement. It'd be a great time to just sit down, discuss your situation. We can walk through not just on the investment side, but better understanding what your income and expenses look like, what your tax planning looks like, insurance, estate planning, all those different important areas. So thanks again for tuning in to Retiring Well, and we hope to see you again soon.